You got your holiday gear ready. Got yourself a nice little drink there. Negative interest rates times means we get paid to take money out of the bank. Okay, not really. I'm not going to drink this. It's 11 o'clock in the morning. I've got to go to the gym. I'll put that back there for now and I'll have it later. Negative interest rates. Looks like this is potentially where the US is heading at the moment. Of course, this is all speculation, but it looks like this could be a possibility in the near future. At least looking at the interest rates futures for January 2021, we can see that it's been priced into the market at that point. Looks like it is going to be cheaper to hold your money than it is to put it in the bank. Of course, there's a lot more to the story. It's not going to be this easy. I want to give some credit where credit is due, and talking here about Graham Stephan and Meet Kevin. Yes, these guys have covered this on their channels, but of course, I'm about cryptocurrency and property, land price, and of course the land stocks. So I want to give you a perspective from that point of the whole investment scale, as opposed to just plain stocks. When I hear of negative interest rates, the first thing I did think about is, wow, we're going to get paid to take money out of the bank because we don't want to be holding the money in the bank because the bank is going to charge us to keep the money in there rather than them give us interest for holding the money into the bank. Obviously, it's gone negative, so they want us to pull the money out. And you kind of think, well, they want us to pull it out so that we can go and spend it and create some stimulus through the economy ourselves. But I don't think it's going to be that simple. Of course, this is crazy times. If this happens, obviously first time in US, and potentially it might lead over into Australia because we are printing hundreds of billions of dollars ourselves, even though, yes, the Aussie dollar isn't worth that much in comparison to the US. But it could happen here as well. We have seen it in other countries overseas, and I'll touch on those just in a little bit in the video to see what sort of effects negative interest rates have had with those guys overseas. From my own point of view with these negative interest rates and how I would see it playing out in the economy is I don't think it's going to have too much of an effect on the little guys, the guys that don't have that much money in the bank. I don't mean it in any harsh way to people who don't have a lot of money in the bank, but I'm talking the guys who have got hundreds of millions, maybe billions, maybe even just a few million in the bank. I think they're the ones that will be hit with the negative interest rates, where the government could see that it's probably more worth their while just to keep the money in the bank and pay the bank for the opportunity to have the money in there, as opposed to pulling it out and then stuffing it somewhere else. And of course, with the larger sums of money, the tens of millions, hundreds of millions, billions, it's not insured in our banks. Our system doesn't insure it up to that point, so they have to put the money somewhere else. Now, this isn't new stuff. This is just pretty much what happens, which is why money needs to be circulated, or which is why they buy US treasuries, because it's basically a guarantee on their money. So as interest rates go negative, then it can be seen that the US government is going to charge them for the privilege of holding US treasuries, as is essentially a guarantee that they'll get their money back, even if it is at a small percentage loss. So for the smaller guys who do have the small amounts in the bank, let's say under $1 million or under 500,000, it's a decent amount of money. There's no judgment at that. I don't think the negative interest rates will hit them too much because it's easier just to take 10, 20 grand out of the bank and hold on to it and do something else with it rather than get charged to hold your money in the bank. Like I said earlier, it's probably going to be the bigger sums of money, which makes it just that much more difficult to move your money around. So for the convenience, you should leave it in the treasuries or in the bank, depending on how much you have. But when it comes to making money on that money, it can't sit there forever. And if it sits there too long, it just starts to erode. So what I like the look of are assets which don't erode. Of course, we know this as assets which are deflationary in nature. Stuff like land, stuff like Bitcoin, stuff like metals. And of course, I'm not deluded like a gold bug or a Bitcoin maximalist. They believe that this is where the majority of the wealth is going to end up. I don't think this is the case. The market is far too small to be holding a lot of this money. And it's not just going to be something that all of this hundreds of millions and billions of dollars are going to rush into gold and into Bitcoin. There is already a market set up for them to hold their money, and that is in land. The land value can increase exponentially, even far more than we can imagine. Even though we think land prices are far too high as they are, just for the average person to be able to purchase some land, there is all of this cash sitting on the sideline and they need somewhere for it to go. And if interest rates go negative, that's even more of an incentive to get it out, put it into an asset that is liquid enough for their size of investment, and still make some income on it. Sure, a small fraction of all of this cash could go into metals, could go into Bitcoin and other cryptocurrencies, which in time may grow to have a big enough market cap to sustain such quantities of money. But initially, I think it's going to go into somewhere that is already established, like the land markets around the world. They are the biggest markets at the moment. Yes, there is huge money in the stock market and other assets of that nature, but land is massive, right? It's just easier for them to put the money in and out of that, and you could still get an income on it in terms of a rental return. If you are enjoying the video so far, be sure to hit the like button and subscribe. I know many of you are watching the videos without being subscribed. God forbid. Hit the subscribe and like, it helps the channel out, helps push the video to more people to see this content for free. So if you're appreciating it, I would also appreciate that. Let's get back to the video. So overall, I don't think the negative interest rates, if of course it does happen, obviously at the moment it's all speculation, but if it does happen, I don't see it as such a negative thing for the economy overall. And we do have an example of what's happened in Switzerland, where the interest rates were slightly negative, 0.75%, and they could see that increased the price of property, of land. This is already happening. We have an example of it happening. I think that's super cool, and it's a developed Western country. So I'm one to assume, or at least use that in my plan to think that this could happen in other countries around the world. Sure, Switzerland is much smaller than the US, but it runs on a similar-ish system overall. So there are so many factors leading into why the next half of the property cycle, and if you haven't seen that already, I've made many videos, even just the one previous to this, I'll leave links up here, and of course at the end of the video, you can go and check those out on my channel. We're in around stage 3, stage 4, so the phase of the 18-year property cycle. And I think these are going to be key elements as to how and why this next half of the cycle, it's not over. This isn't the 2020 collapse to end all collapses. This is how and why I think we're going to go up for the next 5 or so years. Yet to be determined, but we still have another period of the 18-year cycle. We're currently in the growth phase of the 14 years, and then the next 4 years is down. We still have another period to go up. These are fantastic areas to watch. It's like the perfect storm is brewing. Interest rates are going down. You have to move your money out to stimulate the economy. The Fed is printing more money, and it's happening in all of our countries around the world. So there's more cash, there's more liquidity. It has to go somewhere. You just can't hold on to it and put it in the bank. It needs to go somewhere. Where do people think they are going to get an increase in their money as opposed to losing on their money for storing it? History has shown it has been land. And if it's not directly land that you're buying, you may be buying stocks, which are businesses, and those businesses result on land. Like, they have to be somewhere. They're physically somewhere. Even if it is in the tech industry, they still have to have somewhere where their servers are set up and cabling, and their staff work from home. Maybe they want to be in a similar area, even if they are all around the world. Everything comes back to the land value. So all of this money has to go somewhere. We'll see it in the stock market. We'll see the stock market rise. We'll see land values rise. And I think subsequently we will see the assets of metals and Bitcoin and potentially some other cryptocurrencies. They will also rise as well. And they'll rise at a greater rate because they have a smaller market cap, right? So that the market can move in bigger quantities compared to the stock market or something like that. This is the edge as an investor that I like to use on the markets. I don't think there are many other people out there that are using this system as such. They maybe have seen it, they don't believe it, it doesn't resonate with them. That's up to them. For me, and possibly for you that is watching this, maybe you will use that system as well. And that's essentially what we all need as investors, is our own little edge. Of course, all the different edges will work at some degree at some point in time. Overall, I've seen this one to work the best, and that's the one that I use. And like I said, I don't understand why other people aren't using it. Doesn't matter. It's an edge. It works for me. Potentially, we are building our how and our why as to this next part of the 18-year cycle, how it's going to happen. Then we have the human psychology. And as we start to see this play out, of course, if it does, this is a speculation, and this is why we're investing, is because we want to try and make some money and use our edge, right? As we start to see it happen, then people will start to believe it a little bit more, meaning that they will start to see the market go up. and all of a sudden 2020 becomes a distant memory. 2021, maybe that's the low. 2022, we start to move past old highs. Maybe even 2023, we move past the old highs, right? And people become a little bit more confident. This is the market psychology. This is the human psychology playing into the market. This is the game that I'm playing here and keeping it in mind as to how we're going to move forward, right? And so as this happens, like we saw in 2005, 6, 7, more and more people that were pessimistic early on, which was the better time to be investing, they start to jump on board later. And as this continues to snowball, it just escalates even quicker. Now we know this is the time to be selling. We want to start to get out of the market when there is a lot of liquidity for us to sell out our assets at ever increasing prices, because we're expecting a collapse at some point. And this just goes back to Warren Buffett saying, be fearful when others are greedy, and that greedy point comes at the end of the cycle, and greedy when others are fearful. And at the moment, you're still seeing a fair bit of fear out in the markets. 2020, COVID collapse. Be sure to leave a like for the cotton on attire. Maybe I can buy myself another one if I get enough likes and AdSense money. And of course, with all these tools, I think it's important to have a little bit of them in each of your baskets, which is why I've got some links down below to buy yourself Bitcoin in Australia or anywhere around the world actually. Independent reserve, go and check that out. You can use that crypto exchange to connect your bank account to get into some cryptocurrencies like Bitcoin and Ethereum, plenty more on their site. And you can also use crypto.com, and that is where you can earn interest on your cryptocurrencies, anywhere from around 4% to 18% per annum. You can earn between 8 and 12% on your stable coins. So go and check that out. I've got a link in the description down below for that as well. And if you use that link, you'll get $50 of their token MCO, which you can then later sell for US dollars or keep MCO, and potentially it'll increase in value just like an asset. So if you found my take on the zero interest rate possibility in the future and how that is going to affect land prices and of course our favorite deflationary assets like Bitcoin, gold, and silver, leave me a like down below. Hit the subscribe button, and I will catch you guys at the next video. Remember, you can also check me out on Facebook and Instagram. I'm over there daily. You can ask any questions you like there, or of course, in the comments section down below to this video with your thoughts or concerns if you're trying to get into the cryptocurrency market or whatever it is you think is going to happen in society in the coming years. Check you guys at the next video. Thanks again for joining me. Remember, until next time, have more fun to get more done.